Hi, good afternoon, and welcome to this webinar about small business lending. I am very happy to be here today and also very excited for the information and the panel and all the content of this hour and a half that we were able to put together with my colleague Alexis. So thank you for coming today and for participating in our webinar and our agenda. And for that, I'm going to share my screen if I can. So today we have Oscar Perry Abello in conversation with Jeff Ivey and Samira Rajan, and they will discuss about the opportunities and many possibilities that offering small business lending have for our credit unions, as well as some challenges and how to address them. We will also have the information of the Small Business Capital Initiative, ways to get involved. We'll learn about a little bit about our upcoming events. And we also have we wanted to have the chance to get more info about you, all the attendees of this webinar. So welcome everyone again. My name is Rosa Franco, and I am the Vice President of the Loan Participation Marketplace at Inclusiv. But I also come from quite some time, for so many years, of working in the CDCU sector, specifically in the Upper Manhattan of New York, in the capacity of lending director. But before that, also did I handle the credit union education program. So I am very excited to be here today. And with that brief intro, I also want to say that please, I hope you will join us and participate through the Q&A section that we have, so we can know where are you getting connected from and learn a little bit more about you. So with that brief intro, I want to invite my colleague Alexis to handle the next part.
Great, thank you, Rosa, and thank you so much, everyone, for being here today. As Rosa said, we are so thrilled to have our three speakers in conversation and to be able to share some really exciting updates about work that Rosa's been leading. But in the meantime, we wanted to give people the chance to get to know each other a little bit. Who's here? Why are you here? What are you interested in about small business lending? So if you could put in the chat, what credit union you're with, and whether or not you have a small business lending program. So do you make loans to small businesses that are less than $350,000? We would just love to get a sense of who you are and what you're thinking around that. So please pop stuff in the chat. And yep, we've got one person going. And if you don't mind following up on that, we would also love to hear, what your goals are around small business lending. Are you looking to grow your program? Are you looking to start one? Or are you interested in, deepening your impact or other work? So thank you all for being here. Thank you for putting your responses in the chat. Oh, and we've got the poll working. Thank you, Rosa. As you all can tell, we might be having a little bit of technical difficulty, but would love to have you guys fill out the poll too. So thank you all. And without further ado, I will turn our panel over to Oscar Perry Abello, who's going to be moderating a conversation with Samira and Jeff, who are two fantastic credit union leaders whose institutions are doing really exciting work in small business lending.
All right. Well, thank you, Alexis. And it's great to be with all of you at Inclusiv. I was really fortunate to be with Inclusiv last year in Memphis at the annual conference. Looking forward to the conference coming up here in New York, where I'm based. By way of introduction, for those who I haven't had the privilege of meeting yet, I'm Oscar Perry Abello, the Senior Economic Justice Correspondent at Next City. Next City is an independent, nonprofit media outlet covering solutions to advance social, racial, and environmental justice in cities across the country. And in that capacity, I've, as economic justice correspondent, I've written a bunch of stories over the years. I've been with Next City since 2015, and it's been really my privilege to have covered a lot of the work of credit unions like Brooklyn Cooperative, where Samira is coming from today, Hope Credit Union, of course, also some of the smaller credit unions like Concord Federal Credit Union here in Brooklyn, also in Brooklyn, or New Covenant Dominion Federal Credit Union. I did a story about them last year. They're up in the Bronx. Yeah, it's been interesting to see all of the different ways that credit unions can and have met the needs of their members throughout the country and over the years. And it's been really fascinating to see how small business has fit into that. I know that credit unions in general, have been known mostly for their consumer lending for home mortgages or payday alternative loans, or car loans, used car loans, new car loans. But small business lending is something, especially for a low-income designated credit union or a community development credit union. There's a lot of exciting work that is happening, that can happen there, and there's definitely a big need. I was just looking up today, some of the latest statistics coming out from the Federal Reserve or the U.S. Census Survey, and I can find there are numbers out there like 58% of white business owners received the full amount of funding they requested, compared with just under 36% of Black business owners during the pandemic. Black business owners were 10 percentage points more likely than white business owners to be denied all of the funding they requested during the pandemic. One of the interesting kind of paradoxical things in the small business lending world is like, because of the racial wealth disparity, white households have median household net worth of $285,000, Black households around $44,000. So because of that wealth disparity, and because of the lack of access to sources of capital, business owners of color are more likely to need a loan just to cover operating expenses, yet they're also more likely to be denied the amount of funding that they're requesting, or any funding at all, right? And so I'm really excited to talk with Samira and Jeff today about how their credit unions have been meeting this need in their communities here in Brooklyn or down in San Antonio, where River City Federal Credit Union is based. So yeah, without further ado, let me ask Samira to come on first. And Samira, before we get into some more details about specifically your Brooklyn Cooperative Federal Credit Union Small Business Lending Program, you actually were there early on when the credit union started getting into small business lending. So can you talk a little bit about, in the beginning, about how and why you even got into small business lending as a smaller credit union? Today, 50 million in assets, but you were there almost from $0.
Yes, I was. Thank you, Oscar, for the introduction, and thank you to Inclusiv for the invitation. As I remember it, I got into small business lending almost as an inevitability. During the first 2 years of Brooklyn Coop's existence, and the small credit unions out there will remember this, we had a letter of understanding with the NCUA, and the most that we could lend was $5,000. And after that, if we were doing well, it kind of ramped up a little bit. And those were going to be exclusively consumer lending because that was so small. Yet at the same time, the applications that we would receive, a substantial number of them had business purposes. They were Avon sellers, or they were catering out of their home, basically like home cooks, or they were doing food trucks themselves. And these were small requests that they needed, and they fell underneath the 5,000 limits. But the business was a business purpose as opposed to a consumer purpose, like consolidating debt or going on vacation. As we grew into our portfolio in the first, after the first 3, 4, 5 years, it became clear that there were specific there were differences between a business purpose loan and a consumer loan, just even at that small level, differences in the way, in the documentation requirement that you might request, and differences in the risk and in the need for the level of underwriting. When you put that together with the realization that there are, unlike for consumer lending, there are real third-party supports in terms of loan loss reserves and collateral guarantees that are available to small business loans and not to consumer loans, it meant that we were much better off in creating a program which was business lending, calling them business loans, acknowledging the higher risk when it comes to calculating our loan loss reserves, and putting in higher underwriting requirements because there was higher risk, and then over time, eventually becoming qualified as SBA approved lenders, being able to take advantage of third-party guarantees so that the small business lending could continue.
Great, thanks, Samira. I want to bring on Jeff to kind of introduce your credit union and your credit union small business lending program. And Jeff, I don't think you're like 87 years old or older than that, but your credit union has been around much longer. You're at or near 150 million in assets, and so I don't think if you can talk about the origins of your small business lending program, but I think also we'd love to hear about like why it is important for your credit union to be in this space.
Well, now the credit union's 87 years old. I sometimes feel like I'm 87 years old. So yeah, you're not that far off with the age guess there. So yeah, Jeff Ivey, President and CEO of River City Federal Credit Union in San Antonio. So we did not back up for a second. My background was in commercial and business lending, both with credit unions, and I worked on the dark side for a number of years in the banking industry. And so I brought that experience with me to River City. We didn't have a small business program when I arrived in 2018. And what really jump-started our program was the pandemic. When the Paycheck Protection Program was rolled out, we had a discussion internally about, okay, well, we really don't do business lending. We're can do these. We do have an SBA. We're approved with the SBA to do this, but the credit union had never done anything before with it, and quickly made the determination that, if we're going to be true to our mission, if we're going to be true to the principles of being a CDFI and really reach deep into our community and really focus on, those that are financially underserved and unbanked, that includes small business. And we're really going to go after the small businesses because this help is available to them. And a lot of them have never applied for business credit before, which we heard over and over and over again. Well, in the 2 rounds, we ended up doing over $35 million in those loans. And it gave us a look into the small business community in our market. And it kind of confirmed what we thought. These are very underserved individuals running these businesses. They've not had fair access to capital in the past. They've financed their business with personal debt, with personal credit cards, et cetera. And no one's really spent any time with them, talking to them about, you shouldn't be a sole proprietor. You should be an LLC. You should have a partnership agreement here. But to show them what's possible on the business side. And so as we did the PPP loans and as those paid off, then we started getting the return requests. Hey, do you do lines of credit? Do you do credit cards? Do you do commercial real estate? And that really was the catalyst to jumpstart that program for us and start building it internally. Hiring another lender, getting someone to provide support, and then seeking out the different, Samir said, the different guarantee and support resources that are out there, that help us do more of these loans. And so that really, I think being true to our mission is really it was inevitable that we would get deeper into small business lending.
Mhm. And how much of the credit union's portfolio at this point would you consider small business loans? And tell us a little bit too about the kinds of businesses that you're seeing come to you.
Probably from a percentage basis, we're probably running about 12-13% of our loan portfolio now is classified as business. Business or business or commercial. You got the NCA rule. If it's under 50,000, it's really not, you don't have to count it, but we count it. And we do, we do everything from, the really small one-person operations. We do some commercial real estate lending. We've had a lot of success with that, getting companies, helping them get the opportunity to buy the building that they're in or buy a bigger space to expand their business. But we really concentrate on the smaller end. That to me is the biggest area of need, not just in our market, but I think in markets across the country, because the people that are in need of $20,000, $30,000, $40,000, they're the ones that are not getting the access. They're the ones that are being told, just put it on your credit card or go online and look for some anonymous funding source that's going to rip them off. Those businesses are subject to the same predatory pressures that so many of our household and our individual borrowers are subject to. But it's not thought of in the same way. We don't think of small businesses as having to go to finance companies or pseudo payday lenders, but they do. And so we really focus on that smaller end. The majority of our loans are to Hispanic business owners, and about 50% of our business portfolio are to women-owned businesses. And that I'd love to sit here and say, well, that's by design, because it kind of is, but that's also the reality of our market. That's what it looks like. Mm-hmm. And so we were asked to track that at one point. I'm like, okay, we can track that and give you some, I forget who it was. Somebody in Treasury, I think, wanted that. But that's what the market looks like. And so many of our consumer loan members also have small businesses. That's how they're making a living. Right. So, it's a natural extension to help them on the business side.
Right. And are these, can you say a little more about, are they little restaurants, salons, other kinds of retail businesses? Yeah.
You kind of name it. We do restaurants. We do a lot of service-based industries that we deal with. Smaller machine shop, light industrial companies. But a lot of service-based businesses, because we have a service-based economy in San Antonio, and so we have all these businesses that support the tourism industry here, which is huge, and medical supplies, things like that. But a lot of service-based businesses, retail service-based businesses are what we're dealing with.
Mm-hmm. Mm-hmm. Yeah. So it's interesting. So River City Federal Credit Union, almost 90 years old, but newer to the small business lending space. Now, Samira, let me come back to you. Smaller credit union, about $50 million in assets, but you have been doing this for such a long time. And we're going to get to your SBA lending program specifically in a minute. But let me just ask you first to can you talk a little bit about your small business loan portfolio, how much of what percentage of your portfolio is in small business, and what kinds of businesses do you see? Is it similar to restaurants, salons, little grocery stores, bodegas here, all over Brooklyn?
Yeah, certainly those are many of our lenders. We also have other types of, like small service businesses. As Jeff said, there's an interior designer, a lady who runs a yoga studio. There used to be more exposure to the Uber drivers but that's kind of shrunk back a little bit. We've had to take some losses there somehow. But otherwise, yeah, like retail kind of storefronts. There's our largest one is a lady who designs wedding dresses, and it's become a commercial real estate loan. She started with a loan of $4,000. By now, she was able to purchase a building to be able to store the manufacture, so the garment work, as well as the retail showroom. So that's our largest one. As far as overall, then the portfolio, I think the portfolio overall is like 35 million, and at its height, we probably had small unsecured small business loans of about 2 million. So not quite 10%. Then there's another kind of like 4 or 5 million in the commercial real estate loan. So maybe with those combined, it would be around the range that Jeff had suggested, like between 8, 9, 10 to maybe like 12%. Since the pandemic, the trend has been falling in the unsecured business loans. It just took a while, I think, as the pandemic in New York, the lockdown was significant and took many months, and it took down a lot of the small businesses. Understandably, even after 2021, when the vaccination program really made a difference in terms of people's fears of COVID, it's still, business owners took longer to kind of build their confidence back up. So the portfolio remains below kind of what it was before the pandemic. But yeah, those are about the numbers.
Mm-hmm. And one of the things I talked about with both of you previously is the existence in this space of these predatory lenders, predatory small business lenders in particular. So online small business lenders or whoever they are. Can you speak to, how big of a problem is it, or has it been recently? Is it a growing problem for you? Like, are you finding yourselves refinancing predatory loans just to, help with the cash flow of a small business that's coming in? Is that something that happens for both of you?
I would say that it's pretty constant. I don't know that that there's ever been kind of a slowdown in terms of the fraud and the predatory behavior associated with small business lending. We definitely saw that with the PPP program on a large scale, when like the large banks, I don't know what happened to that first round, but then even when it came to the second round, where there was more attention by the SBA to direct PPP funds towards small community lenders who had lower levels of I think of fraud. But even then, like, this is a very difficult area. We haven't honestly been successful in being able to refinance our business owners out of these loans. Oftentimes, by the time they come to us, it's kind of past the point of salvaging. One of, it kind of breaks my heart, a restaurant that was doing so well. I remember the story before the pandemic, and she was amazing, and her business partner did she was the chef, and her business partner did all of the business work in the restaurant. They opened a second location. They got written up in the newspapers. They had, a wonderful grand opening. And, 18 months later, she came back to us. But by that point, things with the second restaurant hadn't gone so well, and she resorted to online. They promised fast cash, right? They promised a 24-hour decision, and you get your money in 3 days. By the time she came to us, it was punishing, and it really did make sense to refinance her out of those, and the business failed. And so what we end up seeing is that by the time the business owner, even by the time they just sign the piece of paper, they're already almost in too deep. And so we haven't regrettably been able to save businesses that we see in this position. All we can do is just advise them to go underground, take their money out of the banks, because if they get judgment against them, because as a bank, right, we see it on the other side too. You see judgments that come against them, and then the bank account is lost. So the predatory behavior is real. I was encouraged. I don't know the details, but I saw within the last week or so, there was an effort by New York State's Attorney General to start to go after some of the predatory behavior with small business lending. It's tricky because a business owner does not enjoy the protections of consumer lending. You don't have to disclose under regulation. We do, obviously. We will disclose to our business owners, but because there's no obligation to do so, it's not a crime to offer somebody a false interest rate. And so for kind of like the lack of protection for business owners to make them a vulnerable target.
Yeah, it's a huge problem. And compounding it is, the belief among a lot of small businesses that they don't qualify for, quote, traditional financing at a bank or a credit union. So they resort to, hey, something online, here we go. This is what this is what I want to, I need the money and everything else. And they also don't have, making it worse is the businesses that don't have the right people in their corner. In other words, an accountant that gives them good advice, legal representation, any kind of resource that has helped them set up the business. So many of these businesses that we see, and I'm sure Samir did as well, they had no help in setting the business up. It's their dream. This is what they know how to do, but no one helped them with the legal organization. No one has advised them. For example, every business thinks they need a line of credit. Every small business thinks they need a line of credit. And when you ask them, well, what do you need the line for? Well, I got to buy a truck. Okay, that's a term loan. That's not a line of credit. But that's what they hear. That's what, they know that, that's a common term. And if no one is helping them, if no one is giving them good advice, they're getting into that exact situation that Samir described. They're in over their head. It's next to impossible to refinance them out of it. And the business is really going to suffer and could ultimately fail just by making some bad decisions on what we would classify as predatory pressures. But so many of them go that route because they're in a pinch and they need the money and they see, yeah, hey, I get $10,000, no questions asked. Well, it's the same thing in the consumer world. Drive by any one of the million payday outlets here in San Antonio, and they all say the same thing. Walk in, walk out with money. And it is hard because too many of them get themselves in that situation, the exact situation Samir just described, where you just can't do it. You can't help them. You can't get them out of it. And it is heartbreaking. But the trick is getting them before they do that. And then also making sure, who is your accountant? Who's helping you? I'm doing the books myself. Is that your background? Not to make light of it, but you need someone that really knows the tax code and really knows how to do a small business return so that it's to the benefit of the business and to the owner. So we spend a lot of time with our small business members talking to them about who's your accountant. Let us talk to your accountant. And we have accountants that we have really good relationships with that we're comfortable referring members to that are in need because we know they're going to take care of them. They're going to get the right advice.
Yeah. Okay, so lots of work to do on this front. But let's. I want to move on to, and I don't want to minimize that, but I want to move on to like how you deal with it. So now you're building a small business lending program, and what are the resources you're able to access to expand this work? And I want to come back to Samira to ask about, and I'm going to put you on. And I do this to Samira a lot if we're just like here in the city, out for happy hour somewhere, or on stage somewhere maybe, or right here. I'm going to do it right now because I find this so astounding that if you count up all the SBA loans made in Brooklyn, all SBA 7A loans made in Brooklyn over the past 10 years, number one, TD Bank, number two is Chase, number three is M&T Bank, number four is Brooklyn Cooperative Federal Credit Union. not by dollar amount, but by number of loans, right? By number of loans, because by dollar amounts, you know, JP Morgan Chase's and M&T and TD, their average SBA loan is like 125,000 versus Brooklyn Cooperative's average SBA loan is 24,000. You know, I looked it up. So can you tell us about the SBA 7A program that you've been using for so many years? There are some limitations to it, but it also helps you solve for a major challenge, and it's helped you, and you've clearly been such an active user of this program over the years. And so tell us a little bit about how it's helped you.
Thanks, Oscar. Yeah, so I think there's a number of ways in which you can understand that statistic. One of them, and the way that I've used this statistic recently, is to talk about the gap that exists, right? So if our average loan is 24,000, the next one up is easily over 100,000, maybe closer to 200,000. That shows you the gap, right? So who's lending in that gap? And I think that if 70 to 80% of small businesses in this country are less than 5 employees, that means 70, 80% of small businesses in this country need loan amounts that are less than 200,000. The absence of providers who are interested in filling that gap leaves the space open for the predatory guys to be able to waltz in, right? So the predatory guys are being able to see this market need and to address it in a way that, unfortunately, responsible financial institutions haven't been willing to do. So the conversation came up, well, you know, why is it? How come Chase doesn't do this or whatever? And it's like, well, you know, it means that you have to invest the time. And so I would say that something that we've taken seriously from the beginning. So currently Brooklyn Coop has 4 full-time loan officers. I'm not included. I count as a loan officer, but you could even say, you know, so that would be 5. But there are 4 full-time loan officers who do this. That's a lot of investment. There's a lot of time. Each one is worth their weight in gold, no question. But they're there to take the time and to sit with the borrowers, to do the site visits. When there's delinquency, they'll also go do a site visit, to be able to be truly like the partner, as Jeff was saying, like a partner who's going to be able to look at what is going on with the business and say, honestly, look, like, this looks like maybe you could get away with that, but that thing over there, you better start paying attention to that. That it just requires that time. There's no substitute for it. All 4 loan officers are also bilingual. They speak English, French, and Spanish. So that points to one of the obstacles why Chase and those guys aren't going to be able to make a dent into this market, because they're not willing to invest the time and the training of their loan officers. They're not going to be interested in ensuring that their loan officers speak the languages of their customers. That also speaks to the people who in our communities are the ones most involved in entrepreneurship, and that tends to be immigrants. There are a ton of barriers. I shouldn't say a ton. They're very clear, innumerable barriers to an immigrant getting a regular W-2 job. There's documentation barriers, there's language barriers, there's education barriers. There are a bunch of super qualified cab drivers in the city. But why are they cab drivers? Because the qualifications they have in their country don't translate over. So when you see the barriers that immigrants face in terms of being able to obtain wage employment, it's no surprise that there's going to be higher entrepreneurship, higher rates of business formation in immigrant communities. And that means if you want to be able to serve those businesses, you do have to be able to speak with them. So, what that statistic to me says is that Brooklyn Coop is in a different category from the other banks in terms of looking at the need for small business credits and working towards addressing that need. Your other question about like what role does the SBA program play? It's really critical, obviously, because of the collateral guarantee. Another strong characteristic of businesses in this category is the lack of wealth. I mean, you started talking about the difference in the wealth between different groups, the inequality in the distribution of wealth. And what that means is that there is going to be a lot of groups out there who just don't have the collateral. They don't have a a family member who has available home equity. We finance loans like that. Somebody will come to us and the ask is a strong ask, but they have a family member who is willing to sign a home equity arrangement and then open up all of this access to credit for that business owner. Not everybody has that. And so the absence of collateral ends up being one more barrier. It's one that happily there are a number of programs, both private and public, that supply those loan loss guarantees and collateral guarantees. And so that's the way in which we use the SBA program. We are mostly in the express version of the program, which offers a 50% guarantee, but is a much faster turnaround. That works for us. There are higher guarantee levels, the 75 or I think it's 85, I forgot, percent level guarantee available for stronger businesses. A lot of our guys don't necessarily fall into that. So even if there were business owners willing to wait the extra like 2-3 weeks before we get a decision back on the higher level of guarantee, they don't always have strong enough either credit scores or the financial statements and the tax returns that would indicate an SBA approval of that guarantee limit. So 2/3 of our portfolio, the unsecured business lending, is backed by an SBA guarantee, and the vast majority is backed by the 50% guarantee.
And for that, it does, yes. And just to flesh it out just a little bit more, can you talk about, so this is covering for loans, obviously, where there is no other collateral really. So that's one.
Yeah, no.
And a lot of folks, I know this is there's a big perception out there that SBA loans, most lenders, most banks have a credit score minimum, because that's their own internal requirement. But there is no actual credit score minimum that comes from the SBA. Like, you don't have to have a credit score minimum for SBA loans.
No, I think that's part of the way that the Express program works, where as long as the lender is qualified, and the SBA does come in every 3 years, and it's a real audit. They'll go through the folders, they'll look at the relative delinquency and the loss rate, our ability to claim back the collateral guarantee, whether we're really fulfilling the requirements, did everybody sign their 1919 or not, right? So they will go through an audit and make sure that we are complying with the terms of the program, but they will be auditing us as the institution and not evaluating individual loan applicants. So if you're willing to go that route, and you can find a way to make the 50% guarantee work, then you don't have to worry about an individual applicant meeting the SBA hurdle.
Right. Turning to you, Jeff, can you talk a little bit about, you were able to utilize the Paycheck Protection Program, but are you able to use the SBA programs in this way? Or are there other programs you have to use because the SBA requirements don't work for the borrowers maybe that you're serving?
Yeah, we've had a struggle with SBA here locally, which is not unusual. I know we're not alone in that. In getting them to, understand what it is we're doing, who we're dealing with. And, Samira mentioned, the immigrant community. We do a fair amount of ITIN based business lending, which, SBA is not going to do. We had that fight during PPP over, daily. On Monday they said it was okay, and then Tuesday it wasn't, that kind of thing. And, we've done, we get a lot of requests on the ITIN side in our small business efforts, and they're no more or less challenging to underwrite than a non-ITIN loan, because you've got financial statements, you've got tax returns, and if you do ITIN lending on the consumer side, do it on the small business side. And as I said at GAC, you don't need NCUA approval to do ITIN lending. You can do it. You just have to, there's lots of credit unions out there you can talk to that have long time established ITIN programs. So we have been trying to get into the Express program with our local SBA field office, because that would fit perfectly with what we're trying to do. Smaller loans that we're going to do, but having that 50% guarantee is going to help us do more. And and because it's a faster program, we're not doing large dollar loans as much on the small business side, but we're doing a big volume small loans. So we need a program that's going to be reactive and is going to really help us do more. We do have a guarantee program with NALCAB, National Association of Latino Community Asset Builders. They provide percentage guarantees on qualified loans, so we've used that successfully. To really take this to the next level, we need that SBA support.
Yeah, for now at least you're able to find other partners. NALCAB for one. Eventually others may have foundations nearby, small or large foundations maybe, that could serve as provide some kind of loan guarantee to help out with a small business program like this. Yeah. Okay. How are we doing on time? I just wanted to check in with Alexis and Rosa on time. Are we okay?
And
Okay.
I'll just flag, there was one question following up in the chat about Jeff's response, so we can, and he already got it, so please go on.
Yeah, it was just, does our policy and procedures include additional steps? And it really doesn't. It's the same information that we require on a non-ITIN borrower. It's the same financial information that we receive regardless of whether it's an ITIN or not.
Okay. Great. So can you talk a little bit about, I'm going to ask you both to talk a little bit about what it's been like dealing with other regulators too. So we're talking about dealing with the SBA, and there's auditing that's required there. How about examiners at the NCUA or any other kind of regulatory agencies that you have to deal with that may look at your small business lending and wonder, like, are you taking on too much risk, or how are you covering for that, or how do you kind of navigate issues around maybe appraisals, doing commercial real estate lending, and someone needs this this is the offer that someone this is the price that a seller has given, but the appraisal is not supporting that. So how do you kind of have you had to deal with those kinds of issues? Yeah, I don't know. We'll come back to Samira and ask about, like, how do you deal? Have you had to deal with examiners looking at your small business portfolio saying things like, "This doesn't look like it should be"?
There's not enough minutes left in this webinar.
There aren't. I was going to say the same thing.
I mean, whatever. It's dispiriting in many ways, because the questions that they ask are so ill-founded, right? Like, you kind of sit there and wonder, you guys done a loan in your life? It's so all of the questions, every single one, all of the 14 pages of findings that come out of our exams that relates to the business loans, whether or not they're real estate backed, are entirely random, have no relationship to the performance of the loan. Just so it's very strange to me. I don't know. And then there's, like, you guys had these lending specialists, like the commercial lending specialist, and you're going,
yeah,
I'm not sure, not really sure. So I don't know. I'm not sure I can be productive with this, Oscar. All I'm going to say is, like, don't roll your eyes the way I do. That I don't think that'll go over well. But there's been zero ability from that I've found over the years to relate, to have a reasonable conversation and to speak, like, to our specific experiences and describe why the things that they're writing down are nonsensical. But I'm nowhere. I'm preparing the most recent batch of nonsense. Actually, for the first time in my life, I'm writing an appeal of an exam, because usually it's like, whatever, I have no time for this, and you just ignore it. But now, like, the most recent exam is stuff which it's just absurd, and so now I have to write an official appeal, and see where that goes. I think we're gonna do fine, because the examiners, indications are actually contradictory. So one of those things they're gonna have to ditch. But yeah, there just seems to be, so it's dispiriting, right? Given how important it
Right.
is for communities and for the credit unions to be able to serve these members well, the lack of even interest, much less experience, the lack of productive dialogue with the examiner on why these loans are important, why we do them. And like, it's not as if you can even say to them, listen, there's no delinquency. They'd be like, oh, well, there's gonna be. It's like, no, there's not gonna be, man. That's very, yeah, the dead end, man. The dead end.
Yeah, I agree, and actually, I'm also writing an appeal on an exam. Yeah, the thing that was apparent to me, because this was the first time they really took a deeper dive into art, because the portfolio's grown, and we said, yeah, it's going to keep growing. This is a major effort. And I think it's important to understand, especially if your credit union is just getting into it, they're probably not going to say much for a year or two. It's going to be about third year, fourth year. Then they're going to say, okay, we're going to take it deep. We're going to bring in a lending specialist. And what I would say, your typical examiner, especially your typical lead examiner, does not have a lot of knowledge when it comes to business or commercial lending. They really don't. And I think there is a lack of understanding about what this means. And on our last exam, I spent a lot of time with our examiners explaining why this is important, why it fits in with our mission, and why we're going to keep doing it. And I kept coming back to, these are underserved. This is an underserved population. We focus on the CDFI tracks in our market. That's where these businesses are located. If we can help stabilize a business's finances, just like we stabilize a household finance, then that's better for the community. It's better for and it's better for the city. And it's one less person that's going to be on government assistance, because we've helped make that business prosperous, and they're self-sufficient now. My other advice is, make sure your policies are overdone. In other words, if you think 80 pages is too much, it's probably not. Your policy needs to be, we're 150 million in assets. We got our policy from a $3 billion credit union that's been doing lending for a long time. Obviously, I changed the name and changed the dollar amounts, but I knew it was NCU. I knew it was acceptable to NCUA, and it covers things that we're not getting. We don't have any real estate properties that we own, but there's a whole section on that. The appraisal policy is a standalone policy. And it needs to be. The flood zone policy, it's a standalone policy. Okay, it's only 2 pages, but I would direct you to some of the NCUA websites, the government, they're no, what, not government, they're examiner workbooks, if you will. And if I knew the website off the top of my head, I'd drop it in the chat. But look at those, because it kind of gives you a peek kind of behind the scenes of what they're going to be looking at, what they're going to be doing. And yeah, it is frustrating, because when you have to explain over and over again, like Samira just said, why we're doing this and why it's important, and then you feel you're getting the pushback, I don't know. To me, it's like, I'm just going to keep, that gives me the fire to keep doing it. Oh, you don't like it? I'm going to keep doing it. So, but it's important. But it's important. You know,
Hmm.
this
Yeah.
is a really important effort. And if we had more credit unions, especially CDFI credit unions that did small business lending, the impact that we could make collectively is huge. And we can't lose sight of that. We can't lose sight of, well, the examiners are going to hassle us a bit. You know what? That's okay. It comes with the territory. They're going to find something. That's their job, you know. And one of the things we're trying to do at Inclusiv, from the board's perspective, is have more dialogue with NCUA on CDFIs and some of the issues we face, and just to get a better understanding of what CDFIs are really all about. And it's not just you know, making small dollar consumer loans, making small dollar small business loans too. So you know, it's just yes. To sum up, it's frustrating at times dealing with the NCUA on these issues, but you know what? I view it as it's a necessary hurdle because of the impact that we're ultimately making in the community. So the fight's worth it, I guess. But don't
Right.
lose patience with it.
Yeah.
Call
I think,
one of
yeah,
us.
I
We
think
can
that's
commiserate. Yeah. Call Samira. Call me. We'll share stories with you.
it's a big takeaway and an important one, I think, to say, to just to flag for folks out there who maybe aren't doing it yet or haven't done it as much, or maybe they've encountered this resistance and maybe it led them to stop. But actually, no. I mean, you can push through it, and they won't shut you down. I mean, here's Brooklyn Cooperative being doing this for this kind of small business lending for, you know, I just talked about the past 10 years, but you were doing it before that. And as you say, I think, you know, Samira and I, we talked about before about, you know, as you all know, examiners rotate in and out, right? So like, if there are more of you doing this, hopefully that increases the odds that the examiner base someone comes in as a new examiner, not new to examining, but new to you as the credit union, and says, oh yeah, I was with Brooklyn Cooperative last year, and now I'm here with River City, and I've seen some of the same stuff, and I can see that it makes sense, maybe. And it's something that that I find I do find very important that it's possible and inspiring, even though it's also a little frustrating, something to watch out for. Let's maybe turn to something of more of a, hopefully a lighter note, but let's talk about deposits. So I know that because of interest rates being what's happened to interest rates over the past year or so, deposits are leaving the banking system, so to speak, although, you know, hopefully mission-based or CDFI or MDI deposits are stickier than, you know, private equity fund deposits. But there are also benefits, I think, in terms of the commercial accounts you can also bring to the credit union. One thing that I often hear from small business technical advisors and experts is like you advise the business to keep 3 months of expenses in your bank account at all times. So where are those 3 months? Are those 3 months of expenses sitting in a big four bank, or could they be sitting in your credit unions? Can you talk a little bit about that as a kind of hidden benefit, hidden boost to the credit union that comes in terms of commercial deposits from small business accounts?
You know, last time I checked, we all need deposits. You know, liquidity. If you have not had your exam yet, they're gonna look at your liquidity, because that, I think everybody saw the priority letter that went out from NCUA, and so liquidity is a hot topic in our industry right now. And yes, you know, a business lending program can definitely help, not just with deposits, but there's also the other products like merchant services and things like that that you can provide if you've got the right partner, that, you know, there's some additional fee income for you. but definitely on the deposit side, a good, getting your business, those of you that have business programs, you know this already. Those of you that are just thinking about it or just starting, it's definitely a way to drive some good deposits to the credit union. Not just, and not just the reserve, not just the expenses in reserve, but just, we've been very pleased, and it's been an important part of our share strategy on the business side. It's exceeded expectations for us.
Anything to add, Samira, on that
don't
front?
have as many. Yeah, we don't have. I think definitely our largest accounts are some of the small business accounts. But I haven't been able to figure out all of the merchant services like Jeff is saying. We're probably maybe that's still another 12, 18 months out for us. So we do experience, and I experience inquiries with regard to moving business accounts to the credit union, but then some disillusionment because we don't have all of the services that they can get from the regular bank. So that's still it's still kind of a work in progress for us. Though I can see how I can see how that road would develop because people do ask, and so far we haven't been able to say yes.
Okay. Let's turn to partnerships now. So Jeff, you mentioned NELCAB, and we've already talked about SBA. Can you talk a little bit about partnerships with other CDFIs, whether they're credit unions or loan funds nearby, that have also been helpful to both sides? What can you kind of bring to what can you bring to the table in addition to a partnership, and what have other CDFIs brought to you in terms of these partnerships? Go ahead, Jeff. You want to start?
Yeah, well, like I mentioned before, one of the great things about being a CDFI and working with other CDFIs is the sharing of knowledge. I'll call them out because I've called them out before. Greylock Credit Union up in Massachusetts. I know some people there pretty well. Sent us all their policies. Here, take them. Here's what we do, and we've been doing it for a long time. So it's not, you never don't feel like you have to start from scratch. We've since shared our policy with some other CDFIs, like, we know this passes muster with NCUA, so take a look at it. Here's how we grade our loans. This is a process that has their blessing. The other thing that I know is important when you're starting down this path is, do you have anybody internally that has that experience, that has business lending experience? Because to me, that's one of the biggest hurdles that we have to overcome within the CDFI movement is, do we have the people that know what they're looking at? Because it is, yes, the true small business loan for $30,000, it's a consumer loan, and you're going to look at it much, Joe's Plumbing is buying a new truck. You're going to look at it the same way as if Joe's buying the truck himself. But then when you get beyond that, do you have someone that can underwrite? Do you have someone that knows the issues? And if you don't, that's okay, because there are a lot of CUSOs out there that provide that service. They do the underwriting. You basically get the lead for them, send them the financials, they underwrite it and send it back to you, and then your credit union makes a decision. And that is, I think that's an overlooked way to do this really effectively and cost efficiently too. Because if you try, you build your own department, that's going to cost some money, because you got to hire a lot of the right people. But if you can find, there are like I said, there are CUSOs out there that do this, and definitely worth investigating if you don't have that expertise on staff.
I think for us, in that same, along those same lines, we've really benefited from participating. both as a buyer and then also as a seller. So as a buyer, you know, it's a way for you to begin to see, like you get a little tiny piece, but it's a giant loan. So you get to see the documents, you get to kind of read the credit memos and understand what the experienced underwriter was really doing when he or she came up with that loan package. And then in selling, it's really helped us to meet higher needs than we really had the risk appetite for at the time. So we've benefited from partnerships in the form of participating with other credit unions. We've also been fortunate with the New York State CDFI fund. Like New York State wanted to make its own CDFI fund after many of the CDFIs in New York State with the CDFI coalition, and I think Inclusiv played a role in that as well, encouraging the legislature in New York State to come up with a version of the fund to support New York State CDFIs. And so we've been able to get grant funding from them for loan loss reserves, as well as support for business banking services over the years. We ended it this year, actually, but for a good 12 years, Brooklyn Co-op's technical assistance to small businesses took the form of tax preparation and tax filing. So we had somebody full-time on staff who worked on exactly those issues that were highlighted earlier about, you know, being able to incorporate correctly and then fill out the right paperwork, because it's a vulnerability not only when it comes to an inability to fulfill an underwriting requirement, so it's a hurdle to getting that loan because you don't have a tax return, but then it's a vulnerability as well because mistakes and incorrect information either to New York State or to New York City or to the IRS, will come with penalties for a small business owner. The filing requirements for a small business owner are like, much, much more, entirely different degree of filing requirements than for an individual. So it really does benefit the small business owner to have at least that consultation with somebody who can tell them the requirements to file for their particular formation for the small business. We've also benefited from also not just New York State, but New York City. For a while, New York City, through its Economic Development Corporation, had a loan loss guarantee program. And so we had applied and been participants in that for a while. Locally in New York, we have back and forth referral relationships with a lot of the TA providers, the business solution centers. There's something called BachNet. There's something called Canva. So every now and then we're able to get referrals for businesses that are seeking loans, and we're able to send them, businesses that are seeking technical assistance. So those are some of the other much more local partnerships.
Mm-hmm. And last question, very recent to the CDFI world, or at least in the past couple of years, all of these different programs, ERP, RRP, and ESIP. Can you talk a little bit about how these programs have benefited your credit? Particularly, if there's any way that these programs have, of course, affected your small business lending programs at either of your credit unions. And I think, Jeff, we'll go to you. I think you all got an ESIP investment. Is that right?
That's correct. Yeah, it's it's really been important to expanding our business lending efforts, all those programs, but ESIP in particular, because we've been able to invest in personnel and in technical resources, infrastructure that is setting the stage for us to continue to grow on the business side. We're hopeful we get our financial assistance grant. We've got that app in for this round with CDFI, which would obviously will help on the provision side. But from a technical standpoint, investing in the right underwriting and documentation programs, and getting out. Getting deeper into the community, and that takes personnel to do that. So ESIP has played an important role for us. One of the things we did with ESIP money is we opened 2 micro branch locations located within community centers within San Antonio, which are definitely in financial deserts, and surrounded by small businesses that have not had equal, fair access to capital. So we, that's, those branches have really helped our small business effort. Yeah. And those came out, and those were because of the SIP funding. So.
And Samira, I think we've talked about different ways you've used both programs, RRP and ERP so far.
Yeah, we didn't get the ESIP, but we did get an ERP grant last year. And in the context of small businesses, that helped us create our internal version of New York City's program. So what I just referred to, which is New York City's loan loss program, came to an end. I think 2-3 years, maybe longer than that. Anyway, a couple of years ago, it came to an end because we had used that guaranteed program for ITIN holders who are applying for business loans. The SBA doesn't accept those borrowers into the program. And so, that particular program was important to kind of bridge the availability of collateral guarantees for ITIN holders. And so when New York City stopped doing that, the timing worked out such that we were able to receive the ERP funding, and we segregated about $400,000 of the ERP funding in a loan loss reserve just to be able to take on small business loans to ITIN holders. And so far we have, I think, we did that over the course of 2023. So I think we have 28 tiny little loans with the ERP funding as loan loss. And I think the total is, it's less than $500,000, maybe more like between 300,000 and 400,000 in principal that's outstanding, backed by that loan loss guarantee. And as you can see by those numbers, there's a long way to go. So we're hoping that loan loss reserve dedicated to the ITIN holders can sustain several years worth of business originations.
Okay. Well, great. I think any last words of advice to folks who are thinking about starting a small business lending program at their CDCU?
I'd say do it. Don't do it. Don't wake up one day and decide you're doing it and then start. But talk to other CDFI credit unions that have these programs. Learn from mistakes. But realize that you're just by getting a small business program going, you're increasing your credit union's impact in the community that you serve, and you're helping more people become financially stable, successful, and you're keeping more money in the community. As Alexis knows, one of the talking points we take to Capitol Hill is, if you want to reduce government spending, increase the CDFI fund, because the more we're able to do with that money, the more people we're able to help, and the fewer people are going to be coming back to the government looking for assistance. And a small business program can definitely help stabilize a lot in the communities that you're serving. So do it. And but just remember, there's a lot of credit unions out there that can help with just guidance, advice, policies, procedures. So you don't ever think you have to start from scratch, because all these programs exist. We'll help you adapt them to your credit union.
I would say
last words.
Look within your membership. I would say look within your membership. Like, you can start with your own membership. As we've said many times, what looks like a consumer loan or even a home equity loan truly has a business purpose. And so insofar as you're already comfortable lending to that borrower, lending to that member, then it's only a small hop over to be able to say, okay, this was a business loan, and let me now think about what are the ways in which I should recalibrate the risk, recalibrate the underwriting a little bit, start to seek out some collateral guarantees, because you did a business loan and you weren't even trying.
Yeah, exactly. Great. Well, thank you, Jeff, and thank you, Samira. It's been great to talk with you today about small business lending, and thanks Inclusiv for having us on. We really appreciate it. I'll turn it back over to Rosa and Alexis.
Thank you, Oscar, and thank you, Samira and Jeff, for this conversation. And I think this is a very good intro for the topic that I will present now. So I want to basically share with you that precisely because we know at Inclusiv the role or the important role that the small business sector plays. So we are implementing a new initiative, and let me just see. So this is the initiative. Please let me know. Can you see my screen and the presentation? Could you confirm?
Yes, you're good. You can go on.
Okay, thank you. So precisely at Inclusiv, we have the Small Business Advisory Committee. And during last year and before that, Inclusiv has been holding conversations with different credit unions that are already working in the field. As you heard, Jeff and Samira, that are offering small business lending, and other credit unions that are already working in the field offering this type of lending. And there are similarities, as you could see after this conversation, in terms of what are the needs and how we can improve our presence collectively in the communities that our CDCU serve. So this initiative basically wants to scale their small business lending in our credit unions through the implementation of capacity building, credit enhancement, and the loan participation marketplace. What are the components and what? So today I will focus in one of or two of them, and this initiative has the following components, which are the capacity building that basically focuses on training and technical assistance. So our credit unions will be able to build the skills with the staff or the internal staff in a way that they can become small business loan officers. The idea is that if your credit union or you want to launch a small business lending program, or you want to expand the portfolio that you already have, this is the place where we are going to work together. And I will explain more details of this in a few. So through capacity building, we are going to work on offering training and technical assistance, as well as outreach support. We also have the next component, that is credit enhancement. So we are going to implement a loan loss fund for credit unions that enroll in this program. And considering that, based on what for example, Jeff and Samira were mentioning in terms of the experience of the staff that we need to start working in the underwriting, processing, origination, and all the compliance that is required to implement small business lending in our credit unions, we will also work with a CUSO that is going to handle the processing and underwriting. So the idea is that the credit unions that already want to participate in this program will be able to focus on building the relationships with the small business community where they are right now, or start expanding those relationships, and why not to start the partnerships with other local agencies that offer small business technical assistance. So the idea is that the credit unions will be able to focus in the field while we provide the support that they need to start the implementation of the small business lending. And we also have the loan participation marketplace, where we are handling these transactions between buyers and sellers or credit unions that are going to be able to manage liquidity needs and also handle the risk associated with this type of lending. So I want to give you some additional information about the training and technical assistance. It's structured in 2 modules. As I said before, we want to work with those CDCUs that want to launch or want to expand their small business lending portfolios. So the first module is specifically oriented to build the small business loan officer skills. And as you can see, we have topics or themes that start from what's a small business ecosystem? What are the regulations required that we need to know as lenders? More characteristics about the SBA and other guarantee programs. And we will also focus in the full cycle of small business lending, like from loan intake, processing, evaluation, underwriting, origination, and after. And we want to focus on learning and sharing this information in terms of credit and access to capital for small businesses from the perspective of the lenders that are our credit unions. We will also be able to link this expertise or these trainings in a way that our new trainees will be able to handle loan intake. So that's where the QSO comes in place, because once these credit unions start getting this relationship with small business owners, it's going to be able, or they will be able to do the loan intake, preparing loan packages, and probably send them out to the QSO that will do the processing, underwriting, and also they will be able to retrieve the credit memo. So the credit union will be able to evaluate and verify if they are willing to approve, deny, or make a counteroffer to that loan. I want to also emphasize that we know that there is a gap in the offering of small business loans for those business owners that need less than $350,000. So we will focus in this segment, understanding that there are differences depending on NCUA regulations, but also keeping in mind the need to make sure that we are working in high impact areas. So this first module will provide the training. Is going to be very practical. So we are looking to have templates, tools. We will also discuss the basic components of the policy or the small business policy. So we will be able to discuss the different topics and that our panelists were presenting before or were discussing before in terms of the challenges. So what we want to do is really target some of the challenges and gaps and sharing the best practices possible that we have in the field as now. And the second module is going to be focused on the small business loan portfolio management. So we have 2 modules of each sessions with each of them. And the second module is mostly oriented to handle and manage the loan servicing, delinquency, how to enroll the loans in the different training and the different guarantee programs, how to handle marketing and outreach strategies. And we will also discuss the loan participation program, what is required to do that or start being there, and also how to get ready for that. So those are the 2 modules that we have in terms of the training and technical assistance. And when I say technical assistance, that means that our team will also work very closely with the participants on the questions that they have in the field when they are doing the loan intake, when they receive an application where maybe the business owner doesn't have a balance sheet, but they have bank statements. So how to deal with those situations, how to retrieve information from how the business works, but also we want to be proactive in the way that the most we see cases in the field, we will be able to also contact other practitioners that will be able to, and we hope, will be able to provide the technical assistance to those business owners so they in the future will be able to access to probably to improve the performance in the management of their own businesses. So that's in terms of the training and technical assistance. And about the loan participation marketplace, if you're interested, let us know. You can contact me. And the idea is that we want to develop this area of our work in a way that you can sell or buy in total or partially the pools of loans that we have in residential solar loans, in mortgages, but also in small business loans. We also provide for those credit unions that don't have the experience in participations or doing participations, either buying or selling. We offer the processing information. We work with you, offering the policies, how you can handle, and how you can actually prepare your own pools if you need that kind of assessment. And also, we want to make sure that a difference or one of the added values of our participation marketplace is that we are going to work with loans that are originated in CDFI investment areas or high impact areas. So for those credit unions that are CDFI certified or they are looking to get that certification, they will be more ready to do that. So right now, we are planning to provide more details about the loan loss fund and also the QSO, because we are in the process of selecting the vendor for this. And we are looking to also give more details about the loan loss fund during the annual conference. So this is an invitation to attend the panel that we have about the small business initiative that we have. And how to get involved.
I think that's my cue. So I hope everyone came away from the fantastic conversation that Oscar moderated with Jeff and Samira, feeling really inspired to either start your own small business lending program, expand it, deepen its impact, given all of the important roles that work plays in the communities everyone is serving. So there are really two key ways to get involved that we want to highlight here for you today. The first is that Inclusiv has a small business subcommittee. And this was a group of our members that got together coming out of the pandemic and PPP and really helped advise us and think about small business lending program and policy also. And now we are, doing a call to expand participation in that group again. And so among our member credit unions who are on the line, if there are folks who are interested in joining us in that work, please do reach out, and we're going to put an easy way to do it up on the screen in just a minute, but you can also always just email me. In addition, as Rosa mentioned, we have all of this incredible programming coming up that is going to become available and that we'll be talking more about at the conference. So for anybody who hasn't registered, I'm putting the link in the chat to learn more, and we hope we'll see you there. But Rosa, if you could put up the final poll, we just have two last questions. The first one gives you an opportunity to share your email with us to either join the small business subcommittee or get more information about the all of the work that Rosa is leading. And the second is just a quick evaluation poll about what you thought about the webinar. So again, just thank you all so much for joining us. Thank you to all of our panelists and speakers. You guys were fantastic, and I think everyone learned a lot today. So if anyone else would like to have the last word, you certainly can.
Hope to see everybody in New York at the conference.
Yes. Excellent last word. I second that. All right. Well, thank you all.
Okay. Bye.
Bye, everyone.
Bye.